can't see the forest through the trees, take a step back, cycle through your graphs. I'm on the daily. We're in the top zone right now. I'm also looking back at the previous two highs. It looks like it's came down sharply. But if you're looking at the 1 minute intraday, you're in an uptrend. There's not a lot of vertical probability, a whole lot of room below you. Over here on the hourly, it's currently showing a bearish trend. I think it'll hold at that support line on the previous low. And you use all of this information to influence your decision. Every morning before the opening bell, go through each graph. I have monthly, weekly, 60 minutes, 30 minutes, 15-minute graph. That 10-day, 15-minute graph is great for intraday trading. 5-minute graph. That is specifically I use for pivot points. Pivot point signals. That 1 minute chart can be a little chaotic. This is where the pattern of price action emerges. I'm going to make my own support and resistance lines based off of historical price action and pivot points. So whenever I see a pivot point high on the same line as a pivot point low, I draw a line. That's going to be a significant barrier for the life of the stock. When I buy, I know exactly when to buy and when to sell because of these lines. Expect consolidation or rejection when your price approaches. Gap up and gap downs overnight are going to be significant lines as well. Break it down, make it even easier. There are only 3 phases of stock price. It's either going up, down, or flat. You can easily identify ascending price action, descending, and consolidation with pivot points and your trend lines. Bet accordingly. Call options, betting the price goes up, puts, betting the price goes down, or zone trade. If it's at the top of the zone during a consolidation, bet it's going down. The stock market is the greatest wealth building machine in the world. I bet on breakouts from these phases. Wait for it to break out and then the retest and bet on the continuation. I see this W all the time. And when the right arm of the W extends past that middle pivot point, you could bet on the continuation. Triangles every day too. Mostly you'll see a triangle when it comes to a price squeeze where as it gets narrower and narrower, it forces the price into a breakout. And of course rectangles when you're drawing your trend lines and consolidation. This is that triangle squeeze I was telling you about. See how the price action makes a flat line on top, flat highs, higher lows into the point of the triangle. It's going to force it to break out, but wait for it to pull back. After a breakout, there's always a pullback, retest, and then buy the continuation. Here's a breakout of continuation. You see it then pulls back to the support line, gaps down overnight, breakout and retest from the W. Another example here, breakout from the trend line and retest. Bet the continuation. I saw a buy come in 2 minutes after market close. Short-term options out of the money. 2 million. Do you think he's guessing? And I was looking there to see at what dollar amount would he make 10%. That's what institutions, banks, hedge funds are looking to make on big buys like that. The economy, COVID means nothing. They drive the market. So I bought a after hours option, follow the smart money. He bet the price was going down, so I'm just double checking things here. We're under the trend line for the day. It didn't drive through it. Big wicks here, bearish wicks. This is the next morning, and he was right. Big gap down. Morning bell. It's not at its low from the night, but strong bearish candlestick coming down. I'm just gathering data here on this technique. I'll let you know what the success percentage is moving forward. I'm going to let the bet run live so you can see the candlestick action. Onward, Mr. In Between, go all.